Hello, this is Brian Shannon from AlphaTrends.net. Today is Monday, the 18th of August, 2008, and the market closed. S&P 500 today lost $1.93, or just about 1.5%, as we've seen that it's been doing battle with this declining 50-day moving average, and also trying to hold above this previous level of resistance here that it keeps battling back and forth at 129. Not quite convinced that it's able to hold above there, and obviously today's sell-off puts that level back in jeopardy again. Today's volume was real light, which is indicative of summer trading, but again, the only thing that pays is price. You can't look at this and say, well, you can't discount the fact that it was down 1.5%, because certainly if you were involved in the market, it was down 1.5%, and you still lost 1.5% of your money if you were long the S&P 500. The obvious level that this market keeps coming down to and finding support is this rising trend line, and we keep testing it in here. And like any other type of support, the more times that it's tested, the more likely it is to fail to hold. And we saw today that intraday the market came down to that level, and as it came down to there, what we saw was that it did find a little bit of support. For the short term, at least, at this prior level of last week's lows, as well as that rising trend line, of course. So it's looking like we've got a lower high in here. We've also got, let's put it on the 30-minute time frame, get a little bit better look at it. We've got a lower high, that's obvious right here. So in order to really think that this market can get any upward momentum again, I think it needs to take out 130.5. This area right here is obviously pretty critical. It was last week's lows. It was tested a couple times, as well as a place where it found support coincident with that trend line today. Now, what I think may be setting up here is maybe a little slight rally tomorrow morning, even up to maybe 129 or so, up to a declining 5-day moving average, and then maybe we could see the next leg lower, and I think that would represent a great opportunity to either trade the spider short or to get exposure via the inverse fund, which is the SDS. So I think that the handwriting appears as though it's on the wall for a breakdown. If it can get back above this level here, probably about 129.25, then maybe it's just going to be more range bound. But right now it seems as though there's sellers in this market. I think that a little fake out in the morning would be just a perfect little setup to, once it begins to roll back over, if this materializes, what we want to see is a rally. We want to see that rally roll over, protect ourselves with a stop, and take advantage of further downside. By the way, I don't know if you guys have signed up for that Twitter, but this morning I was posting some trades in there, and 4 for 4 on the trades that I posted in there this morning. One of them was the SKF, which took a 3-point move out of that. So go ahead and take a look at Twitter. My username over there is AlphaTrends if you want to see some of the intraday trades that I do, that I'll be posting over there from time to time. The Russell 2000 was down also, down 97 cents. We see that this prior level of resistance from back in late May did become an area where we found sellers once again. We've got a more bullish picture in here, though, with a rising 10, 20, and that 50-day moving average is starting to flatten out. But on the weekly time frame, again, this is the key level, and this is what we talked about in that live event on Sunday afternoon as well. So this market, expended a lot of energy coming up to a level where you would expect to find supply. Now it seems as though maybe we're getting some profit taking up in here. This market also has a very obvious trend line that's been intact in here, and also coincides with last week's lows right here at about 73.40 or so, let's call it. So breaking below 73.40 could lead to the next leg lower, down maybe towards about that 72.5 level that was support. And when these significant trend lines break, they get a lot of attention. So be careful in here. This market could be pulling back down towards 72 or so. The only thing that would really get me bullish is being able to somehow get back up above there. But with a declining 5-day moving average, I don't think that's very likely. I think you're more likely to see a rally up towards this level with this prior support acting as resistance than perhaps an opportunity to sell them short. Financials actually, I thought they held up pretty good considering Fannie and Freddie. They were down to new closing lows today, but this market remains a mess. There are some good intraday opportunities in there. What we saw in here was that they had done battle with the with the daily VWAP in here, and that's where the sellers took control during mid-morning here today. It broke that support from Thursday. We saw this little pattern of higher highs and higher lows broken right here. That was tested, acted as resistance. Now we're heading back lower again, and looking at the 30-minute time frame, a key level in here again is $19.75. We do have lower highs. We have this resistance at the declining 5-day moving average. The financials remain a mess. The problem with remaining short these things is Paulson will come on TV and say something. We're going to be buying $5 billion worth of Freddie Mac or whatever, and then these things will all gap higher. So they remain a very volatile, dangerous group. Obviously, the path of least resistance, when you look at the longer-term time frame, remains lower. A lot of people have bought into this thinking that the bottom's been made. Bottoms are a process, not an event. If they don't scare you out on the way down, they'll typically wear you out. So take this breakdown seriously in here, and listen to the message of the market. Basically, let's see. Let's take a look at the NASDAQ 100 and then wrap it up. The NASDAQ 100, also, we're back to below this Fibonacci level that we've been looking at, the 2/3 retracement, and it looks like it's heading back down towards that 200-day moving average at 47. It's encouraging here on the daily time frame to see that it's holding above that 10-day moving average, but again, we're at this level of prior, this important prior level of support where the market broke down from, and overall on the weekly time frame, it's just a big mess in here, making this big triangle in here basically. So you can't really read too much into today's sell-off, but you have to take it seriously that this support here at about 47.20 or so, let's just call it, breaking below there would put this market back in jeopardy of heading back down towards this level that the most recent move developed from, which was the break past that 46.10 level or so. And same thing here, we've got a declining 5-day moving average. It looks like 48 now has the potential to be where the sellers will be found if we get any rally up from here, and then I would be looking for the something like this to develop where you could take advantage of the short side, and then perhaps see that 47.20 level break and a move back down towards about $46.10. As I've been saying, it's a trader's market. There remains a lot of risk in this environment, and you've got to be quick to react.